Good morning. Welcome to the B.F. Anderson Techno Fundamental Report for January the 18th. You know, when we first start out investing, I started out professionally in 1976. You have to look at all the different possibilities and probabilities of what's going to be successful for you. Now, you have to have a certain kind of mind for this. I went through a period of at least 20 years where I was just kind of searching, looking for the right avenues. I tried getting involved in the oil and gas industry. I tried getting involved in real estate. And then I got involved, actually invested in the movies. So you can go into these different areas and it can really be a tremendous amount of wasted time, but it's the way you learn. You learn from making these investment mistakes. So there's a lot of angles and a lot of ways to go. So let's look at one. Here's one that I'm having to deal with in my mind because I can't understand it. I do not understand cryptocurrency. I do not understand Bitcoin. Now, we just have had a bunch of news here about how there's a new ETF which opens the floodgates to the $30 trillion wealth management market. So that means that financial planners out there that do this kind of stuff, are going to put so much of your money in gold, so much of your money in Bitcoin, so much in stocks, bonds, so forth. I think it's a tremendous waste of time. I think we're going to look back on this and say, boy, was that a scam. Charlie Munger says the same thing. Charlie Munger, who passed away recently, basically says it's a disease, should be banned. I mean, if you think about all the problems that it causes, because the only people that are exchanging with Bitcoin and cryptocurrencies are criminals, the people that do ransomware. I mean, it's that kind of thing. Now, Jamie Dimon came out yesterday and said he's done talking about it. He says you can do what, because they were asking him, of all your JP Morgan brokers, what are you telling them to tell their clients? And he's basically said, I'm tired of arguing about it. If they want to do it, do it. But it's a personal opinion. It's a personal thing. But he says Bitcoin does nothing. It really doesn't. It's a non-producing asset. He calls it his pet rock. He also says that it's worthless and that it's hyped up fraud. So it's just something that is out there. It's a possible investment decision. But I'm just like with options and margin and all that, I just have decided to pass on all that. I just want to focus on two things. I want to focus on growth stocks and I want to focus on cash. Now, there's a reason that I don't do bonds. I've never bought a bond. Ron Barron, in his recent interview, says I've never owned a bond ever. And there's a reason, and the reason is that inflation eats you up. I mean, if you look here at since 1960, the average inflation rate, could be 4 or 5%, 2 to 4%. Who knows what it's going to be? It's up now. But like Milton Friedman says, inflation is taxation without legislation. So it's just another form of a tax. So when you figure the taxes in of inflation plus the regular unearned income tax, you're really barely breaking even on these things. And so I have decided that bonds are just not for me. This inflation thing goes back to Roman times. The Romans, their economy collapsed over inflation because they started out with gold coins and then they cut everything down to lead coins. So basically, that's enough on inflation, but stocks are the way to go. Stocks are no doubt about it. Since 1902, here's the Great Depression in here. Now, it hasn't been easy. We all know that. But it's really been the only viable investment out there that has really been a great hedge against inflation. Now, you can argue real estate, but I'm just saying the beauty of stocks is you have liquidity. Now, another area I would really be kind of avoiding would be China. This is the Crane Shares, which is a China Internet ETF. You can see here, going back to 2015, 2014, hadn't gone anywhere. It's been it had a period of time where the Chinese stocks were hot, but I don't know, they look pretty negative to me. Now, just to kind of catch up on where we are in the market, we are seeing a few yellow flags out there. This is new highs on the NASDAQ, minus new lows. You can kind of see we're seeing somewhat of a breakdown here. Nothing too serious. The trends are still up. The primary trend is still up, but we are seeing some problem areas. Here is the number of new lows on the New York Stock Exchange. This has been the first day. Yesterday was one of the first days we've seen actually Tuesday, that we were above 40 a day. However, we've been doing quite well. I would continue to stay constructive and bullish, but just, kind of maybe slow down a little bit here. Here are 3 economic indicators. Now, what the problem is with the market right now, I believe, is that we're starting to see kind of an upturn here in interest rates. This is a 10-year Treasury, back up over 4%, 4.1 to be exact. Then we've got the oil continuing to just languish under the 200-day, just moving sideways. Financial stocks have somewhat rolled over due to the interest rates. The whole market is kind of pulling back here. But this is still in an uptrend. However, we are seeing a little bit of a rollover. Let's look at some graphs just to kind of take a look at some individual stocks here real quick. This is Advanced Micro Devices. These are stocks that are on my watch list. I don't necessarily own them, but I'm watching them. Now, one thing to realize about a basing pattern is that what you're seeing here is where the buyers and the sellers are going back and forth. In other words, stock prices move up and down due to imbalances of supply and demand. So what you want to look for if you're buying stocks is where it becomes apparent that the buyers are taking over. So in other words, you go through this wobbly consolidation here, then you get a humongous amount of volume, which that could be Fidelity, it could be Vanguard, it could be T. Rowe Price, it could be the state of California retirement plans. You don't know who this is, but somebody knows something, and the buyers are taking over, and then you can see the beginning of an uptrend. You can see the last couple of days we've actually seen a similar pattern here. This particular stock looks very constructive. Now here's Datadog, which is a $41 billion company that no one's heard of. But the bottom line is this, the same kind of pattern. The sellers are somewhat in control here. Something happens, probably earnings came out, gap up, and then you get a nice uptrend going. You have to deal with this issue in here, and then we're back in an uptrend. So Datadog kind of looks interesting. Deckers, this is a shoe company. Again, you see the same pattern, the same general idea that you should never buy a stock in a downtrend. Always look for uptrends, because what the downtrend means is the sellers are in control, and there's just, the imbalance of supply and demand is more towards the sellers. Here's a stock, we do own this stock. This is a company called Elastic. This is in data centers. You can see here, very big gap up here with volume coming in, big gap up, lots of consolidation in here. We had somewhat of a correction right here in the beginning of the year, but it looks like to me the uptrend is resuming. Now let's look at a downtrend. I have this is one more we're going to look at. Intuitive Surgical. This is the Da Vinci robotic surgery. Again, you can kind of see where we have somewhat of a cup, and then we get the breakout, and then we get the uptrend. Now recently we got a real nice pickup in volume and what we call a gap up buy signal. Now a downtrend would be Boeing. Now we all know, you got to remember, price is everything. Now we can sit here all day long and talk about Boeing's backlog of, airplanes to build. We know about their problems that they're having and so forth. But as you can see here, this stock really kind of launched into an uptrend, but then it's failing. This is what we're using a 10-day moving average here. What we would do here is we say, okay, we have broken and closed below the 10-day moving average after an extended period of time where it traveled up the 10-day moving average. Then we get what we call a violation, which is where it breaks below that low, and that's a sell signal. And you can see here the stock is definitely in a downtrend. Now, you should avoid this stock, but I would keep an eye on it to see if it bases out and then kind of starts to work its way back up again. So that's all I have today. If you have any questions, please let me know. Thank you very much.